Absolutely massive news. 4 years in the making, a decrease of 50 basis points. The Fed has cut interest rates for the first time since 2020. You go look at the S&P 500 chart on the daily. I mean, nothing crazy. Right now, it's currently green as I'm doing this video. Nothing crazy, though. What I want to discuss in this video is a bigger headline, is from a macro perspective, the bigger news that we really need to keep an eye on. We're also going to dig into the Bitcoin charts on the zoomed in to talk about the short-term Bitcoin price action. I think it's incredibly important to watch. There's caution on these charts that we have to keep in mind. This news, I think, is very bullish, the rate cuts. But there's bigger news, and there's also a bigger perspective in play. So please hit the subscribe, hit the like. Let's try and tackle all of these things. I want to start here really briefly. For those asking, 105 out of 114 economists were wrong in expecting 25 basis points. Everybody, economists, headlines, one thing that I've learned over the years, they're just either wrong or they're lying to you. And so I'm not sitting here saying we need to be macroeconomic professors or something. I'm not a macroeconomic professor. So I didn't go to university for macroeconomics, but we can absolutely study the data. We can understand what has happened historically and what data says is likely to happen again. These cycles repeat themselves like crazy. Not just Bitcoin. I'm talking about rate cut cycles and traditional market cycles. So let's take the data that we know. Let's not be so manipulated by headlines and economists, and let's see what's going on. Mike Alford over here said 50 basis points insanity. They want to create a melt up. Wow. And I agree. Melt up, everybody. They want to create a melt up. A melt up, I think, is likely to happen. And this is something that is incredibly bullish on the macro. But I keep saying macro because let me just say, and we'll dive into the short-term price action. You look at a chart like this. On the short term, I mean, you can just see a kind of a triple top potentially in play on the S&P 500. There's a 200-day over here. Maybe in the coming weeks, the week or two, or even next month, we're trickling down. Markets are moving down and people are like, what is going on? Why is this happening? I thought this was bullish news. I thought we're entering a really bullish environment. Well, let me just say, retracements on the shorter term does not mean we're not entering a macro bullish environment, but they're very normal. The data that we have, the data that I have and that I've been tracking, for one, is out of, you can see up here in this purple box, point number one, we talk about it nonstop. Out of 14 rate cycles since 1929, the S&P 500 has positive returns 12 times. 12 out of 14 rate cycles, 12 times has been positive returns the 12 months following the first rate cut. Not the first 12 days, okay? So we could absolutely see markets fall because of the rate cuts, right? We're talking 12 months. 12 out of 14. And a lot of people are like, well, man, Dan, back in 2007 and 2008, that was just disastrous. That even on the macro didn't look very good. We're just not in that environment in terms of what was happening from a real estate perspective. And so we're in a way different cycle right now. It's not, you can't just compare it to that. So we go further into this, right? And this is the bigger headline that I really want to also integrate into the charts. Anthony Pompliano, I think he makes a really good point. Everyone is focused on the interest rate cuts this week, but M2 money supply is now expanding at the same time. Cheap capital is coming fast. And it is. And it looks like with great velocity. And what does that mean? If this is happening, we're going to have markets likely increase. We have money circulating, coming into circulation across the world, across economies. We talked about this briefly in yesterday's video. And so when we start taking that into perspective, we pair it up with rate cuts and 12-month after rate cut data, and we can even pair that up or add that onto the recession data. Typically, after a recession starts, if there's a recession, 3 months after a recession is the bottom for markets. Markets are not the economy. All of these things, and then we have this. This is a really nice picture. The next bull run starts in October 2024. BTC cycles begin 170 days after halving and peak 310 days later. This is the data. That's what the chart looks like. That 170-day mark, we've really tracked something very similar on the total crypto market cap chart. These purple lines, right? And if you look at the purple line from the Bitcoin halving, I have it around 200 days. That second purple line, that's essentially altcoin season historically. Around 200 days post Bitcoin halving. So very similar concept. And then if you just look at the chart, everybody, and you see the repetition of these cycles, And you can see it very clearly in this post. That white line, for instance, is basically where we are. We're getting ready for, I think, a macro breakout. So on the macro, it makes sense why things are looking so bullish. And here's that line on the Bitcoin chart. You can see these yellow lines across the cycles. We are very close to an insane breakout. But what if in the next week, 2 weeks, couple months, Bitcoin's going to fall and put in a higher low? That does not mean that this chart won't play out in a similar bullish fashion as previous cycles. If anything, because of the consolidation, if it happens, we are so primed for what many would call a super cycle and for insane gains. But let's talk about the Bitcoin short-term charts, because we can put aside all the headlines and we could just really start tracking just the short-term price action without emotion, without, narratives and all of that. And we start looking for just technical bullish confirmations or bearish confirmations. And right now we're in like an iffy territory. And let me explain why. Bitcoin, as you know, we've been waiting for it to just get above these moving averages. It's gotten above the green, which is the 20-day. The blue is the 50-day. That's right around 59,300. Right now, Bitcoin is testing a very confluent resistance area. And let me talk about three data points here. First, this swing high back here in August to the swing low, that green rectangle, which I've highlighted in purple, you can see right there. Bitcoin is testing that lower high Fibonacci. Whether there's news, headlines or not, whether there's rate cuts today or not, this is happening. This is a technical indicator we have to keep an eye on. It goes up to around $62,200, $300. Second piece of data, which plays into the Bitcoin resistance, is a short-term holder cost basis. We've been looking a lot at this lately. Short-term holder realized price, you can just see in orange. And Bitcoin, we're looking for it to get above that orange line, the black line above the orange line. That's a bullish move that we're waiting for Bitcoin. And this chart, by the way, goes back to like July. But you can see the story of this playing out over cycles. That's another piece of data, some resistance above Bitcoin right now. And then the third piece of data, if you notice, we obviously have in yellow this massive falling wedge, a half a year long falling wedge. But if you notice in blue, this dotted line right there, it's a kind of an upper trend line of a shorter term descending triangle. I mean, to me, it just looks mostly like a descending triangle. I'm sure you could chart this and be like, you know what, that's kind of going down a little bit. It's kind of a falling wedge. But right now, I'm just kind of seeing just like this lower trend line consistency right there, meaning it's a descending triangle. And we're at the upper trend line right now, testing that area. This is a lower high in this kind of lower high pattern that's going back to end of July. So we're a key resistance area. Headlines are not. So bullish confirmation, we're looking for a move above all that area, really up to around 62,300. Notice what's just above there. Around 64,000 is a 200-day moving average, an incredibly important macro area that Bitcoin needs to get back above. If you go to the weekly, that really lines closely up with the green line. This is the macro important line. 62,700 is a 20-week moving average. I mean, on the macro, this is the biggest resistance that we want to see Bitcoin get back above. This is bull market indicator territory. Bitcoin needs to get back above that. I don't know if it's going to happen this week, next week, or even maybe it'll be a couple months before it happens. I don't know. But Bitcoin needs to do that to really start triggering the parabolic bull run, to trigger the macro bullishness that we're constantly talking about, that we're constantly kind of waiting for at this moment of the cycle. To the downside, I want to talk about it because, again, 12 months after rate cuts, historically, we see positive returns, 12 out of 14 cycles, not 12 days. This means 12 days, 12 weeks. S&P, traditional markets, they can fall. They can reset. They can do whatever they're going to do. And we have to be very careful for that. And so if that is the case, say we fall, to the 200-day moving average, for instance, what if that's the fall? And then it's just putting in some type of, move there. It's like an 8% move on S&P 500. What does that look like for Bitcoin? If that's going to happen and Bitcoin starts falling, crypto starts falling, this could be a 15% move for Bitcoin to the lower trend line, another lower low. People start calling for the bear market. But for me, I will be zoomed out on all of these charts. Here's the total crypto market cap chart. I will be zoomed out on that chart. I will be zoomed out on the Bitcoin chart on the weekly. And I will just be saying, you know what? Higher low territory is in play, even if we're falling. Even if we're falling into the 40s and we're putting in a higher low at the 200-week moving average on Bitcoin. This is a higher low, and the Bitcoin bull cycle is still in play. So This is how I'm looking at the whole picture. And there's so many moving parts. It's insane. But economists, analysts, nobody knows what will happen next. All we can do is anticipate all of these moves and just say at any given time, am I prepared for that? And am I prepared for that? Meaning, am I prepared for the breakout to the upside? Right? Or am I prepared for a fall to the downside? That's all. But I do know one thing. I'm very bullish, especially on the macro charts, and that's what I'm watching. So let me know your thoughts today, everybody. Big news either way. Hit the subscribe, hit the like. I appreciate you cruising through. I'll see you in the next video. God bless.